With the recent supply shock on Ethereum, it seems like it's almost sparked off this entire bull run, especially within altcoins that we've seen recently. I mean, we've seen Ethereum absolutely climbing. We've seen ADA absolutely smashing it. We have BNB and XRP going up crazy. And so with that being said, I want to talk about where Ethereum might be going, what's causing a lot of this, what some of our targets are, what we can expect going forward, and how we can wrap this all up to start having anticipations about what we should be doing with our investments. My name's Tyler Hill, and welcome back to another video on the channel. Of course, if you are new here, I would appreciate it, of course, if you could subscribe if you do enjoy the content, smash that like button if you do enjoy this video. And with that being said, of course, let's go ahead and let's get straight into the charts here. So one thing we can see is before we even get into any technical analysis or anything of that nature, I just want to show you what I'm talking about. So this is actually provided by Willy Woo on Twitter. He is an on-chain analyst, and what he is going to be focusing on more is just the supply shock. So what we've seen recently is that we've seen a large amount of Ethereum being transferred off of centralized exchanges. Okay, now people could be doing many different things with it. There's no, I would say, 100% area in which it's all going, but whether it be staking, whether it be going into NFTs on something like OpenSea, as NFTs are exploding right now, or with all of these things going on, especially after we did see the London hard fork happening now with the burn and all of that good stuff, we're definitely seeing an effect on the supply of Ethereum itself. And of course, that supply does decrease, demand does increase, as it is demand is increasing right now. Of course, that does lead to an increase in the price, which can of course be represented on this chart here. So the purple line is just going to be your overall exchange supply shock, the amount of the Ethereum that is available on exchanges itself and how it's being affected, like how much it's dropping by. And then we can also see the price itself in the blue here. And what we can see is that right now there's been this absolute explosion of the supply shock itself. This is not the supply, but the supply shock, the overall effect that it's having on the supply. And what we can see here is that the last time that we have, these big explosions like this, it does typically trigger this big uptick in the supply shock itself, which is then also in correlation with a climb in the price. It's happened every single time, and I don't have any reason to believe it won't continue now. And so since the fact that we are starting to see the supply shock happening, since we are starting to see the fact that the price is climbing in conjunction with that, and also plus the fact that we are seeing over $1 billion worth of Ethereum in about 10 transactions, from these whales right now, and a lot of money is flowing in, I wanted to talk about some of our different levels and what my anticipations are, where I think the price can go and how this can overall start to flow, because I think that there are some pretty high price targets right now, especially considering the fact that the majority of the buying happening for Ethereum is from institutional investors. Retail investors are doing a good job, but the majority of it is institutions. And I think that now that we are starting to see that big inflow of money, that will likely continue, cause a domino effect. And I really think this could be the opportunity for us to break out of this downtrend in which we have been in, and then continue on into the rally and continue on into the bull run in which we have seen over the last few years. Not a year, I mean about a year, right? I mean, it's been a very, very good few years. It's just been phenomenal. Okay, and I think that's very on track to continue. Okay, so what we're going to be looking at today is some of these levels and how are we going to reach it. So from the video, of course, you can see that my price target, my breakout target, if we are going to continue the bull run, is at minimum $6,000. I think it's highly likely. I think it's highly possible if we do see the bull run continue. Now, of course, this could be a dead cat bounce. Of course, we could be looking at a fall here, but since the majority of this movement is backed by institutional investors, I think that becomes less and less likely over time. Okay, so what are we looking at right now? Well, of course, we did see Ethereum have this absolutely amazing double bottom play out. Now, it wasn't just a double bottom. It's actually starting to interact with a lot of our Fibonacci retracement levels, and that was a very key aspect of it, because if we're going to see a climb like this, I definitely want to see that the movement is healthy. I don't want to just see that the price is climbing for no reason or reaching unreasonable levels with no actual technicals to back it, and that's not what's happening. We're seeing a lot of healthy movement here. So if we do go from our swing high down to our swing low, one thing we can see, of course, I did draw it from our all-time high down to our swing low on July 21st or June 26th, whichever one you want to consider. And what we can see here is that the 236, this level right here, actually did act as our breakout target for our double bottom. Now, what I mean by that is whenever you see a double bottom, it looks a lot like a W. That middle line in the W, this middle movement here, whatever we set that as, wherever that high goes, that's our breakout. So if we're able to work our way back up to it, clear it, boom, that's a sign that we had this double bottom. And of course, our breakout target is then going to be the distance from that line, that same exact line that we just talked about, down to the bottom of that double bottom, which of course would be here. We apply that to where the breakout happened, and then of course we can see that, I mean, that was an absolutely beautiful breakout. And then once we did see that upward momentum, it was just not stopping at that point. Now, so with that being said, of course, we are seeing a lot of upward momentum. I do believe this thing should slow down at some given point soon, but you really can never tell, especially whenever we see big rallies like this with the amount of sentiment that there is right now. I just think that a lot of upward continuation is very, very possible. possible. And so I want to talk about where we're going, where these levels are, and what technicals there are to back them, of course. So at the moment, just in terms of, what are we seeing happening, we're starting to see a lot of our short-term Fibonacci extensions allowing us to reach our long-term Fibonacci retracements. So of course, what I mean by that is whenever we see movements like this, right? We go up, we fall, we start to set some of these lower highs, boom, 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 whatever, okay? Well, one thing we know is that realistically, our main goal is we go from our swing high down to our swing low. And our main goal is to interact with our 786 to 618. We want to climb back up. We want to work our way back into this zone, clear the 786, and work our way up past our all-time high to start to set new highs, of course. Well, one way in which we have to do that, in order for the price to get there, we have to see the execution of our short-term Fibonacci extensions. So remember, these levels are retracements because they're still below our high. But there are things such as extensions of Fibonacci's is once we clear the high, there's levels that we can anticipate we will reach going forward. The two that I pay the most attention to right now are the 1.272 and the 1.618. And so the whole goal here is that in order for us to reach these important retracement levels, we need to go in and set some of these new highs above our local highs using our extensions. And so, of course, we would start with like the bottom one. We would draw a Fibonacci extension, and our first goal would be to execute on the 1.618 here, right? We clear our 786, maybe establish the support. We go up, boom, we hit our 1.618, and now we're starting to work on some of our levels of our actual retracement itself, okay? And so let's talk about some of these levels. Let's talk about how they're working right now and what we're actually seeing going on with the charts themselves to show that this is actually being, it's working very efficiently, and we're starting to see a lot of these Fibonacci extensions get executed. So one thing we can see, of course, if we do just start from our lowest swing high to swing low, we can see that, this was executed beautifully. We go ahead, and I'll talk about this red box in a little bit, but we go ahead, we start to work our way back up. We hit our 1.618, we clear 786, or our 0.618, sorry. We clear our 0.786. We then go up, we touch our high, fall back down to our 618, establish that as support, and then boom, see you later. Here we go. So we work our way back up, we execute our 1.272, we then fall back down to our previous high, and then use that as support. Again, rocket fuel to then execute on our 1.618. Now, execute just means we're able to reach it and surpass it. So if I say execute an extension, it just means that we're trying to surpass that extension there. Well, from there, what we could see is that if we do go ahead and we do know, all right, well, we did surpass our 1.618 extension off of this swing high. So what I'm going to do is I'm going to take the high that I set and just drag it up to the next one. So one thing we can see here is that we're currently working on the 1.618 on this short term or slash midterm, depending on how you look at it, swing high down to swing low. Okay. So one thing we know right now is that we did absolutely smash through the 1.272. We had a little bit of resistance. It took us a day to really get past it. Over the course of this day, we did execute it, but ended up closing below it. So you can see that we were operating on it and we're starting to work in congruency with it. But in the next day, absolutely just killed it, went up there, came back down, established it as support, retested our 1.618 here, and very briefly did we execute it. Now, I always look at it, if we can surpass it, I consider that an execution. I would absolutely love to see that we can surpass it and close above it, but even the fact that we did a wick above it just kind of goes to show me I think that there still is a good bit of upward momentum, that even if we do have a bit of a pullback, even if we do cool down a little bit, that we will be able to eventually surpass it. So since I do believe that, and since I do have that anticipation, we're going to go ahead, we're going to take our swing high to our swing low, and we're going to look at how we do execute on the next one. So the next one is going to be our last one. This is going to be our very, very last Fibonacci extension, in which we do need to execute before we basically do call this thing a full bull run, and we do start to look at our breakout target, which of course is about $6,000, which of course I will explain how we got that number in a second here. So what we can see is, of course, now we are looking at our swing high down to our lowest swing low. So let's talk about where these levels are. So as you can see, what I'm going to go ahead and do is I'm going to draw this line because this line is very important. Let's go right there. Okay. So this line right here is the same exact level. So our 1.272 from our swing high down to our swing low is the same exact level on a more short-term perspective. If we drag it back down to the high in which we were just talking about, that 1.272 on the long term is also the 1.618 on the shorter term. So as you can see here, this is actually acting as two Fibonacci extension levels on two different movements, which just goes to show the overall importance of this level itself right here. So what we're going to go ahead and do is we're actually going to type out 1.618 because it's the 1.618 on the short term. And we're also going to type out 1.272. 1.272, because on the more midterm, it's also going to be acting as our 1.272. So if we do go ahead, we drag our swing high all the way back up here, we can see that it's operating as both of those levels. So the fact that we did execute on that again, since we did clear this, I am under the belief again that we will start to see upward momentum continue as we did just go over, especially considering the fact that it is the 1.618 on that previous swing high, swing low. And that does give me the opinion that, okay, well, I think we're going to be able to continue upward, even if we do see a pullback here. So from there, the whole goal behind this one now is if we are able to surpass the 1.272, I always believe that if we can clear that extension and we can actually get some momentum going again, say if we do something along these lines, boom, we maybe fall, we retest our high here, and then we start going back up and we really get some momentum. I have no reason to ever believe that we're not going to hit our 1.618. It happens the majority of the time, and it's not usual that we hit the 1.272 without reaching the 1.618. And so with that belief being said, I do believe that if we are able to do that and we are able to get some momentum going again, my next price target is then going to be right up here, and I'm going to add price labels in 1 second, at our 1.618. So this is our 1.618 here, and I'm labeling them because it'll be important to for organization in a second here, because it may get a little confusing. Okay, so one thing we can see is, again, we have our 1.618 on the short term, and actually what I'm going to go ahead and do is let's do this, because this is we're going to go blank, and we're going to give it a slash. And now that blank just goes to show that it's not one of our extensions off of that shorter term swing high, swing low, but on this long term swing high, swing low, it is also our 1.618 to the 1.272. Okay, it creates that little range, just like you can see here, 1.618, 1.272. Okay, now what I want you to pay attention to is, again, I am under the belief that if we gain momentum and we clear this level, that we are going to shoot up to 1.618, no doubt in my mind at all. Now, with that being said, look how important that level actually becomes. Well, if I go ahead and I take that same swing high and I drag it all the way back up, one thing I use with my Fibonacci extensions is I like to use true resistance. Now, what I mean by true resistance is that when we have events of this nature, where we have, let's see, 1, 2, 3, about 4, 5, 6 days, 5 to 6 days, where we set resistance at one level, but then we have that one outlier that just randomly wicks up much higher, I like to consider this our true resistance right here, because we can see that it's acted as resistance for the majority of the days, rather than it's just one outlier. Some people don't. I do. Personally speaking, I've noticed it just kind of makes things flow a little bit easier, and we start to notice that the levels become much more specific and precise if we do use true resistance. And so with that being said, I look at it as this is the stronger resistance, considering the fact that 5 of our 6 days here, this is where we spent resistance at, rather than this one random wick up to, just a few levels, right? That was probably just an impulse move. Okay, so what we can go ahead and see now is that if I do draw that, if we go still from our swing high, our all-time high, to our swing low down here, well, look how amazing this is. So you guys know, we went over it earlier in the video, that our whole goal with retracements is to get into this zone. We want to get to our 618 to our 786. So that's the overall target. And if we're able to clear the 618 and we are able to clear the 786, the bull run continues. Well, look how those same extension levels off of this move here, our 1.272, our swing high to swing low right here. This extension, our 1.272 was this line. If we move that over here to this swing high, to that same swing low, this was our 1.618, sorry. On that same on that same swing low, and we move the swing high up, that then becomes our 1.272, with this becoming our 1.618 now. Well, look how whenever we do then establish this as our swing high, down to that same swing low, those extension levels become our retracement levels, and they then become the 0.618 and the 0.786. Now, remember I said that if we can execute on the 1.272, I believe we will reach the 1.618. Well, that goes to show that if we do gain momentum and we clear this level and establish support, that same level that we would then be able to execute on, that 1.618 extension from our swing high to our swing low, is also represented by our 786. And if that is the case, considering the fact that at 1.618 is our 786, and if we clear our 786, I believe the bull run continues. That goes to show that I truly believe we're not many steps away from this bull run continuing. Because if we clear here, boom, establish some support and execute on the 618, bull run continues as long as we can hold it and establish support at some point. Of course, that's very important. We don't want to just touch it. We don't just want to touch it and fall back down. That's still a retracement, okay? But that gives us that momentum. That gives us the target and the technical reasonings to get above these levels in which we are, because it's not just hoping. It's not just kind of looking at the charts, drawing out Fibonacci retracement levels and just saying, well, I hope it reaches that level. No, you got to use these different levels. You got to use your extensions, because those are our reasonings. That is our technical targets. And as we meet those targets, we reach some of our retracement levels. We reach reach our retracement levels, we clear the important ones, the bull run continues. And so with that being said, of course, what I'm expecting from that point forward, if we do go ahead and we clear our 786, which is also our 1.618 extension on our midterm, I would say swing high to swing low, that will also then give us the ability to continue this bull run. Well, one thing you guys do know is that from that point forward, we are then looking at our extensions. So whenever you clear your retracement levels, then your extensions start to come into play, right? So if we do go ahead and we start to pay attention to what this means for us, well, that goes to show us that if we are able to clear that and the bull run does continue and we enter into price target discovery after we clear our all-time high, well, then we start to look at, okay, where are our extensions at? Well, considering how much we've been executing on the 1.272 and the 1.618, my personal target itself, which is not 100% like going to happen, just my anticipation goes to say that if we clear our all-time high, I honestly believe we then start to be able to work our way up to execute on the 1.272 again to the 1.618, and from there I think it will be heavy resistance. If you do go ahead and draw your all-time high at true resistance, I think that it does put your 1.618 at 5,750. If you do go ahead and you draw it above the wick, if you draw it at the wick, it puts our breakout target right at $6,000. You know, it's a $250 difference, but I think we would all be happy with that one way or another. But you can kind of go ahead and see that it's all about extensions for me. We've cleared our EMAs. We're good on our EMAs. I'm not worried about them right now. If we go look at our weeklies, one thing we did notice is that throughout this entire thing, if I do go ahead and remove drawings, throughout this entire thing, we never even touched our 50 EMA, which is a fantastic sign because in our previous bull run, we also never did. And so in the middle of the bull run, there'd be many times we would come down and lose our 20 EMA, but we never touched the 50 EMA, and then that would allow us to continue upwards. And so many things do point to upward momentum coming in the next couple months. So do anticipate that a pullback is coming. Of course, we do want to see that we do have that that realistic movement. It's not just going to go straight up, but we can see things like 1, 2, we come back down, 3, 4, boom, boom, and we see these type of movements, right? Elliott wave theory. We love to see that because that's healthy movement. So do anticipate that there are going to be pullbacks. In the next video, we're going to talk about support levels. We're going to talk about where it could be going, but this one I really wanted to focus on how we get to that $6,000 target, and then we'll start to break it down a little bit on more shorter time frames in the next coming videos, of course. So with that being said, guys, that is going to be about it for today's video. I hope you did enjoy. I hope you did kind of get to see how I look at these things and how these retracement levels versus extension levels do work. Of course, do pay close attention to those very specific levels in which we did talk about. I would say that the biggest two we need to keep an eye on at the moment, if I do go ahead and just draw these out, of course, are going to be, and I'm going to price labels these up just for you so you can see, our 1.618, 1.272, and our 618 extension is at 3,239, and then the most important level that we of course need to clear right now is about 3,700. So keep an eye on those. If we do surpass them, do anticipate that the bull run does continue. I would be very surprised if it doesn't, and I'll of course update you guys as soon as I do get any more information or something changes my opinion. With that being said, again, I hope you guys did enjoy today's video. I'll see you all in the next one. Peace.